Hello. We are live with a new edition of At the Wheel with me, Joe White of the High Speed Rodeo newsletter, and Tu Lee of Sino Auto Insights. We'll be diving into the latest news and trends in the world of cars, and this week, the future of electric vehicles in the US market, actually globally. And some new insights about the Chinese market are on our list. We have a lot to say, but none of it should be taken as investment advice. And although Tu and I enjoy hearing ourselves talk, the reason for this live stream is to take questions and listen to comments from you, our audience. So please post anything you want to discuss with us or have us discuss in the chat box, which you should see on your screens. Tu, good morning, at least here in the Eastern time zone in Detroit. Hope you're well. We have a lot to talk about. And I do want to get to China, but I wanted to get to, this is what I wrote about in the latest edition of the High Speed Rodeo.
I'm actually very curious to hear your detailed thoughts on opining a bit more about what you've written about.
Yeah, I mean, I basically, I said the EVs are headed over the cliff, and I stand by that. In fact, I just updated my piece, my newsletter, with some additional material that kind of globalizes the point that I made. It was really focused at the start on the United States. But look, I mean, it really feels like, and I think as we head into the third quarter results calls from Tesla, Ford, and GM next week, there's probably others as well, but certainly sort of those three are all going to happen this coming week. I mean, I think it's going to be really clear to people that we're in a new place with the whole project to convince consumers to adopt EVs in a mass way. In the United States, we're now in the era of no significant federal purchase incentives for EVs. GM this week took a 1.6 billion, or said they'll take a 1.6 billion dollar charge, and basically they said because of the change in policy by the Trump administration, we don't see electric vehicle sales measuring up to what we expected, and they're basically writing off a bunch of investments in production capacity.
And let me stop you there real quick. And this despite them launching the new Bolt starting in 2026 and them saying the Equinox, which is a $35,000 EV, and the Bolt, which should start at $29,000, despite those tailwinds, they're still saying EV adoption is going to slow down.
That's right. Well, right. It's going to be slower than what they anticipated and slower than what they tooled up for, and what they tooled up for. And the announcement did not specify. I mean, they didn't say, well, we think EV sales in the United States are going to be, 1 million instead of 3 million. But it's clear it was significant enough that the board and their audit committee felt like, look, we have to take this charge. And you see Stellantis, when they announced a $13 billion investment program for the United States. And I don't necessarily want to go too deeply into that, except to say this, that virtually all of the investment is around combustion vehicles. I mean, the Belvidere, Illinois factory that was going to build electric vehicles, they're going to have a battery plant, that's all off the table. They're going to build combustion Jeeps, they're going to take the jobs from Canada. So you see a lot of signals in the United States.
I think that's a key point, Joe, repatriating Canadian manufacturing back to the U.S.
Yeah, no, I think and Stellantis didn't say this out loud, at least not to my knowledge, but it's pretty clear that there was among the audiences that they were trying to impress was was Donald Trump. And John Elkann, this has been reported by a number of different outlets. John Elkann, who's the chairman of Stellantis, has been courting Trump, meeting with Trump, going to events, trying to convince Trump to kind of go easy on Stellantis or go easy on the auto industry generally, and promising this investment. And this announcement is part of that. So, but back to electric vehicles. I mean, so you see this cliff in the United States. Everybody's forecasting, a drop in sales, maybe a significant drop. We're going to find out, because it's I see it as a live action experiment in what is the natural level of EV sales in the United States market without the federal government subsidizing or trying to put its thumb on the scales. It's going to be more or less a free market. just quick, and then we're going to get to China in a couple of sentences here. And I want you to talk about some of the things that we see in China. But meanwhile, in Europe, it's a different deal. European EV sales are still significantly more, as higher percentage than the United States. But you see the German government and the incumbent auto industry just lobbying the European Union to back off on this 2035 deadline to stop selling combustion vehicles. And I was just looking at this today. The EU has agreed to review that. And the German government, which still throws some weight, actually a lot of weight in the EU, is essentially saying, forget about this. It's not realistic. We can't do it. And then you come to China, and it's this weird picture, right? On the one hand, EV sales were strong in September based on the latest data. EV exports doubled. I want to come back to that. But the market is a mess. And you have the government basically saying, this price war that's underway in the Chinese market needs to stop. To talk about China, I mean, it's a different kind of a cliff. It's a different kind of stress in the Chinese EV market. But what do you see happening there? How do you square all these circles? EV exports are doubling, price war is continuing. Talk about that.
So we are a week into the sprint to the end of the year. And traditionally in China, right after the October holiday, where the entire country takes a week off, that's when the last 3 years you've seen crazy incentives from the Chinese EV makers to try to take share from one another. And let's just not even talk about the ICE vehicles in China, because it's all about new energy vehicles, so including plug-in hybrids. It's over 50% now, which means about 16 million units in 2025.
It's bigger than the size of the EV market in China is the size of the United States.
Just about, and it's more than the entire EU market. And so, to your point about, let me talk about exports first, because BYD is breaking records on exports. Chery, who just recently IPO'd, they're at 53% exports to 47% domestic sales. So if you're Chery, that's awesome, but also concerning because you're not really gaining a lot of traction in your domestic market. And where we see differences in BYD and Chery is that their manufacturing footprints are going to be pretty substantial outside of China. Yeah. Okay, so those are going to be two clear leading indicators for BYD and Chery being leaders.
I saw a
from among the Chinese makers.
I saw a story, I think it was yesterday, that BYD is now looking at Spain as a potential assembly point, and the third, I think, would be the third one within the walls of the European Union. So they're moving, double time to execute what the Japanese and Koreans did over, I don't know, a decade or two, right?
So let me add some color to that. As Stellantis and Elkann is getting hammered by the Italian government because of what happened to Magneti Marelli and the layoffs there. So in Munich during the auto show that I was at a month ago or 2 months ago, Volkswagen Group drove 4 MEB Plus platform sub 25,000 euro hatchbacks that are all going to be built in Spain. Right. So Spain is doing something really, really well with regards to attracting electric vehicle production. And whenever production comes, there's likely going to be batteries as well. So I think CATL is looking at Spain as a landing spot too. And this addresses some of that concern about imports into the EU. But in the same or last week, the EU saber rattled a little bit, and I had actually texted our friend Simon Wright about forcing IP transfer from Chinese EV makers if they want to build and sell into the EU. So this is the China strategy being utilized by the EU in order to ensure jobs.
That's what the Chinese did, 30 years ago when Volkswagen and other Western car makers wanted to come into that market. They said, well, sure, you got to form a 50-50 joint venture and teach our companies how to build cars. I mean, didn't quite say it like that, but they kind of did, right? And that's certainly what happened. Well, right. I mean, in a way, honestly, and it's not up to me, but do you blame the European Union trade regulators and trade negotiators for that? I don't. I mean,
I
because
do not at all. I
yeah,
think it's a shrewd move, whether that gets actual support or if it's just a warning shot to try to soften some of the negotiations between the EU and China. Because here's what they're really talking about behind closed doors. Okay, how much investment are you going to make in the EU? You know, we can't let you ship kits because that's not really helping our citizens. And then they're probably looking at some of the connected software and hardware restrictions. And the Chinese are probably trying to soften the EU stance on some of that stuff. So if they allow a certain amount of manufacturing and foreign direct investment into the EU, does the EU soften their stance on data privacy, data security, and all that stuff? So I think those are the things to look at. But then let's circle back to the domestic Chinese market. So the BYDs, they're a little bit on their heels because you're seeing Geely's and Leapmotor and some of the more mass market price brands, Onvo from Neo, really taking share a little bit from BYD. And BYD, the mighty BYD, originally had a 5.5 million unit forecast for sales globally in 2025. They've reduced that to 4.6 million. So that's a significant number.
yeah, that's a almost.
And 20% of their current sales get shipped abroad. Okay. And
Yeah.
let me
But
add to that real quick. The UK and Germany are seeing triple, quadruple digit growth. Now with Germany, it's like almost a 3,000% growth, but on a
small
small
base.
base. The UK is also seeing triple digits, so 600-700% growth. And so we're seeing landing spots, particularly for BYD, but it also is an early indicator that these countries are very open to Chinese brands.
Yeah, it's a bit of a dilemma, right? Because the EU, back to what I started with, I mean, the EU is still very much on board for a significant shift, or maybe ultimately a total shift to electric vehicles. The Chinese electric vehicles, accelerate that. If you keep them out, you're the United States, where where the electric vehicle share is going to be sub 10%, probably for a long, long time. But on the other hand, and when I saw this data about EV exports doubling just in the month of September, and I don't know if there was some anomaly in the year ago September numbers, but whatever, it's still significant. I think one of the first things I thought was that's not sustainable. Not because the Chinese can't produce the vehicles. In fact, they could probably produce 5 times that number of vehicles, right, given the overcapacity. But it just doesn't seem like, especially the European countries that have incumbent auto industries and incumbent auto jobs, are going to put up with that forever. They're going to get pressure from unions, pressure from the employers, pressure from across the board, not to kind of let Chinese imports swamp their markets. I mean, it just seems like that's and I wonder even in Southeast Asia, right, where a lot of these exported Chinese vehicles are also going, right, in Latin America, whether especially in a country like Brazil, where there's an incumbent auto industry employing people and unions. It just seems like exporting every single car that you can make out of China doesn't seem like a long-term sustainable strategy. Or is it? I mean, what do you think?
So there's already additional protectionism by Mexico looking at raising tariff to 50%. Brazil has already raised it to 35%. But Brazil has already a big bag, from General Motors, from Stellantis, from Great Wall, from BYD. They've gotten a lot of foreign direct investment from these companies. I do also want to remind you, and you know this, Joe, GM exports 70% of their exports are exported from China.
Yeah, a lot of them to Mexico.
Yes, for
Right.
Latin America, right? And so, but you raise a great point about Southeast Asia, South Asia, Latin America. These are the emerging markets that have the growth opportunity because in the EU and we're taking share from somebody. We're
Yeah,
not
it's the market.
growing share.
The markets, the population and the market are not significantly going to grow significantly, at least the way things look right now, right? So it's a pie that's the same size, and you're just slicing it up. But Southeast
And
Asia and India, those are different matters, right?
well, so this it's clearly advantage China EV Inc. just because they know how to manage costs very well. They live in the mass market, 9, 10, 12,000 US dollar vehicles. And in order for a Volkswagen, a General Motors, or a Stellantis to even get close to that number and be profitable, they're going to have to right size their companies because their overhead costs are substantially higher. Creates this mad dash again to pull sales from 2026 into 2025 because all the Chinese companies domestically want to end on a good note. And we're seeing some companies that we've traditionally seen were the stars and the stronger players now starting to reel a little bit. And it's almost like it's a vicious cycle because BYD comes out with a bunch of products, they lull for 6 months, and then their competitors come out with strong products. But I think the important thing and the thing that you're referring to is this involution and
Yeah, it's
how
an interesting word.
suppliers aren't getting paid,
Right.
and there's still companies that are a little bit like zombies that are still out there building cars. It actually, one of the big reasons the Chinese government is so concerned about this is because the companies like the Neos, the Xpengs, the BYDs, who are actually pretty competitive, it actually pushes out profitability for those companies because these state-owned enterprises are just pumping out cars, So big concerns. And 2026 is just going to be, and I say this every year, but such an important year. And the last thing I'll say, Joe, is because of this protectionism we're seeing in other parts of the world, the 3D chess being played on the trade policy, that's why the US market is so important to the Chinese. It's the second largest market in the world.
The
It
richest.
is a high margin market for everyone except American. But well, they make a bunch of money in the US market too. Probably, actually, I take that back. They make the most money in the US market, but
They make all their money in
yeah,
the U.S.
okay.
And I want to come to
Fair.
that back to that in a second, or maybe right now. Yeah, I mean, and that kind of connects with something else that happened this week. For the first time, at least according to Cox Automotive and I think it's Cloud Theory that supplies data to Automotive News and other outlets, the average price of a new vehicle sold in the United States crossed $50,000.
It's going the wrong way.
Yeah, it's going the wrong way if you think of the market in the way that we have thought about the auto market for most of the last, since World War II, certainly, and maybe before then, which is that the U.S. auto industry's job was to provide, transportation for the middle class. The middle class and obviously wealthier, but certainly the middle class. That the idea was middle class families, middle class people should be able to afford a new vehicle. Back in the 50s was every other year or every 3 years, right? Now it's a much longer cycle than that. This 50,000 thing is symbolic. It's not, 2 weeks ago it was 49,700. So what's the difference? But it is symbolic. And to me, it just says that the auto industry, the US auto industry anyway, and this, I'm going to tie this back to China, see how I do. The US auto industry, has basically got back to the point it was in the early 90s, which it's catering to the wealthy. It's catering to the top,
Mm.
it's this growing number of households that I found some data from the Federal Reserve. The number of households that sort of in the top 10%, that number has been growing. You can almost sustain a business just catering to the top 10% of the income distribution in the United States. It's like 12 or 15 million households, something like that, doing off the top of my head. But it's like that. If you figure the top 20%, that's enough. Bottom 50%, buy a used car. So that's where the US auto industry has gotten to. They're selling pickup trucks at Mercedes prices. The number one vehicle in the United States selling at 100,000 and up is not a BMW or a Mercedes. It's the Cadillac Escalade. So they are staking a lot of their future volume and profitability on the very wealthiest people. Here comes the China part. And I want you to talk about this because you showed me an interesting chart from Auto Pacific. It's not like people who can't afford a $75,000 pickup truck in the United States, that those US consumers are unaware that the Chinese are offering really cool vehicles at much lower prices, right? And it seems like somewhere in that tension, there's going to be eventually some pressure to say, look, why can't we have a Xiaomi, with all this cool tech, or why can't we have a BYD that we could, I could buy as my commuter car for $12,000 or $15,000, not 50. I mean, it seems like there's a tension there, and I don't know, maybe it'll never be resolved, but it seems like people know that what they're looking at in the U.S. market is increasingly a an elite market, something for basically people with elite levels of income, not for people in the middle class.
And I'm going to double down on that point, Joe, because these vehicles are getting full-throated endorsements from domestic automaker CEOs. So it's not just this social media thing and they're seeing it on TikTok or Instagram and they're like, these look like cool cars. They're being endorsed by CEOs
Yeah,
of
right,
US automotive companies.
right.
And I always knew in this is where I'm going to, I'm going to stretch my arm a little bit, pat myself on the back, because as someone who started his career in an automotive factory and grew up in Pontiac, Michigan, where the Fiero was built about 3 miles from my house back in the day, I just understand completely fit, form, and function, how things should be working from a manufacturing standpoint, panel gaps. And so that's why I wrote the newsletter 7 years ago, because I was like, holy cow, they're catching up, they're caught up, and these cars are actually pretty cool. 7 years ago, they were still kind of clunky. But in that time frame, in that short period of, they've learned and adapted and
Yeah,
have grown and
essentially
have,
two product cycles from that, from 7 to 10 years
for
ago.
traditional automakers, but for the Chinese makers, it's like five product
Yeah,
life cycles.
yeah, yeah, yeah.
And so to me, it's an inevitability. How does the U.S. government embrace, or because we're doing the exact opposite, right? We're keeping them out, but to your point, the U.S. consumer is likely, especially because Auto Pacific, that chart or that report basically said, I'm happy to buy a Chinese car.
Yeah,
The one surprising brand to me was that they want to look at Huawei.
well, right. Yeah, Huawei, which is the devil incarnate as far as the U.S. government is concerned. I mean, that's like synonymous with national security threat. The Chinese trying to embed themselves, their spyware in our entire society. Blah blah blah. Right. I mean, I say blah blah blah. I shouldn't maybe dismiss that. I think there's some legitimate issues. Right, Huawei, a brand that you're not supposed to like if you're an American, and
They've
yet,
done everything possible to kind of manipulate the American consumer from not liking that brand, right?
yeah, and yet, Auto Pacific. I mean, I do you know? I mean, if you don't, it's fine. But I was wondering, kind of, what was the sample size of that Auto Pacific study? I mean, was it a big sample, or was it like? It, I was
I want to
surprised.
say it's well over 10,000
All right, well,
respondents.
that's pretty big. That's pretty big.
But remember also that Auto Pacific is more West Coast,
Yeah,
so
absolutely.
there's likely a bit, and we'll have to get behind the scenes and talk with Ed a little bit,
I think that would be a fun thing to do. Let's consider that because yeah, I think that would be yeah. Well,
because
look,
I
you say
I
West.
just think that maybe it's a Midwest bias that we have, that we need to understand the rest of the United
That's
States,
exactly what I was about to.
because we're getting chirped in our ears by the big three all the time here in Detroit and Metro
Yeah.
Detroit.
Well, I just spent 2 weeks plus in the western, in the Intermountain West. I'm doing this. The place I call between the mountain ranges that I like to joke about is the last bastion of the U.S. brand. Yeah, it sure is. And right, I mean, there's no Huawei is going to be sold in Wyoming or Western Colorado. But as we know,
About that, Joe, because the
they'll tow them
UK,
behind
because
their
I'm looking. I'm looking at the Anglo countries, the closest to probably taste wise. So the UK, Germany to a lesser extent, Australia, and they're embracing. Now, they also have this common thread that they don't manufacture. Well, Germany does, but
Yeah.
the UK and Australia doesn't really manufacture anything anymore in the
Well,
automotive
the
state.
UK has jobs provided by companies like Tata, which owns Jaguar. Australia, not so much, but yeah, I mean, there's a spectrum there, though. I mean, Germany is certainly an automotive country for sure, but you're right. It doesn't matter in any one of those environments. You've got consumers who are excited about what they see coming out of the Chinese, which brings me to a point, and I'm not sure if this is our last point or next to last point for today, but I want to ask you about this. Okay, fine. So the United States, as a matter of public policy, government policy is like going the opposite direction from China and probably the opposite direction from Europe, saying, you know, never mind EVs, just keep focusing on combustion and selling that kind of product. And I guess the question is, so I'm asking this kind of as a straw man. So what? What if U.S. automakers and and companies that are focused on the U.S. market like Toyota or Honda, so what? What's the problem if they don't really need to invest in EVs or to be successful, in this market? What do you think the problem with that is?
We lose out on innovation and we lose out on competitiveness in the long run because it's a it's almost like self-defeating because we're going to continue or the private sector is going to continue investing in ICE and combustion, and we're likely going to be one of the few regions long term that's still looking at petrol and oil and all these things where everyone else has moved on to clean energy because that's where the innovation is happening. And if if we want profitable GM that only sells in one region, then that's okay, right? Because you and I had gone to that Automotive Ventures conference in Georgia, and one of the arguments was, do we want globally competitive or do we want profitable?
Yeah.
And and to me, our soft power is what makes one of the things that makes the US great is our soft power. The fact that we have global brands, the fact that
People like.
you go to any country almost in the world, any major country, you're going to see a McDonald's, you're going to see a Starbucks, and that is a huge thing. China is dying for that, to have this soft power and ubiquity with its brands and its important companies, and we have that. And if we lose out on that, I don't know. The people to people exchange is always so important. We only talk about governments and trade policies and things like that, but the people to people exchange is what makes the United States one of the most important things, and it makes it great for me.
Yeah, no, I agree with that, and I also think I do wonder. I mean, the history of the U.S. auto industry, and I am thinking of the Detroit companies, but frankly also the companies that have embedded here really heavily, again like Toyota and Honda, and that depend on this market. I mean, I think Toyota and Honda are probably going to be less susceptible to the risks I'm going to try to describe, which is if you look at the history of the Detroit brands, it wasn't until they were really challenged that they really changed and that they changed the product and that they changed the technology. And I don't know that that history is that that's going to be different today than it was in 1975, 4. And I think again, maybe this is what Jim Farley at Ford is talking about. Without the challenge presented by the Chinese, not just in electrification, right, but in the whole the software centric vehicle, having a vehicle that's updatable and upgradable, matches the experience of owning a smartphone, which is what the best of Tesla certainly pioneered that. The best of the Chinese brands have got that. Very few to none of the incumbent automakers in Europe or the United States have really got a handle on this. As we know, Volkswagen basically had to buy a chunk of Rivian to get access to this, and it seems like it's so.
And Xpeng.
And an Xpeng, right? Volkswagen. So anyway, it does seem like the risk of sinking into the lazy boy of the US truck market, combustion truck market, and saying, oh, okay, we'll spend money figuring out software architecture later. We don't have to do that now. We'll spend money figuring out, how to build a more competitive, lower cost battery. We don't have to do that now. And there's no incentive for us to do that now. We can make money doing what we're doing. We're going to bring back the Hemi. That's how we're going to spend our capital. And it's tough, right? Because honestly, bringing back the Hemi for Dodge and Ram is probably the smart thing to do right now. Is it the smart thing to do for 5 to 10 years from now? That's what we're going to find out. And I hope it doesn't go the wrong way.
I'm going to isolate Ford and GM though, because Stellantis does have a 21% stake in Leapmotor. So they're talking out of both sides of their mouths, where they're like, Dodge and Ram and Jeep, they're going engine heavy, petrol heavy. But guess what? On a dime, they could turn because they have existing IP from Leapmotor that's probably going to be in some of the vehicles in the United States.
Yeah, and
Okay.
that's the smart hedge I think they have to have. You're right. Yeah.
And here's the other thing, Joe. We haven't even talked about Silicon Valley. We're only talking about China. And
Right.
there will be a time where Waymo is going to be one of the dominant services for transportation. And again, does it get into the mass market, or is it just a wealthy service? But the ubiquity of transportation and the technology that's going to enable innovation in that space, in the transportation space, that's not just coming from China, that's coming from Silicon Valley. And
Right. And I do hear, right, I agree with that. And I do hear a lot of talk just in the last few weeks from consumer auto executives, not Waymo. I mean, Waymo, we know what they're doing. The consumer auto executives talking about how autonomy is like going to be the gotta have it feature. Elon Musk has been saying that for a long time. He just hasn't actually delivered it. But you're right. I mean, I do think that autonomy and a certain level of self-driving is important. And you're right that Waymo does seem to be ramping up something that will be taking a growing share of transportation revenue from the system. I don't know that it's all additive. Like somebody's cheese will be stolen here. Again, I mean, you're right. I mean, we should move. We should do an audition of this out in San Francisco
I'll
because
do that. We could do that for
because
sure.
we sit here in Detroit, we'll be the last people to see some of these trends.
The one thing that is also needs to be highlighted is that Uber plans to be one of the largest transportation providers in the world in the next 15 years.
Yeah, leveraging
Lyft,
technology from Waymo and other.
right?
Vehicle
They're the picks and shovel people, okay? And Lyft, they acquired a free now because Lyft was predominantly North American. Now they're in Europe through this acquisition. They just announced a partnership with Tensor Auto. I don't know if you remember a company called AutoX. It's a Chinese autonomous vehicle startup. So
Okay.
Professor X is the founder. He has now started a new company called Tensor Auto based in San Jose. They've unveiled a robocar that Lyft is partnering with them on to use the Tesla model, where when you and I could own the robocar, but when we're not in it, it can go set, make us some money.
So
Okay.
Airbnb for robo taxis, kind of a thing.
In I'm just about to press send on this week's newsletter. I have a million questions about this Tensor Auto. Where are these cars going to get built? What
Mhm.
stacks are going to be in them? Chinese, Western, a mixture. Because what I do know is when China EV is working through the EU details, and when it enters the United States or North America, they're going to want to water down those technology restrictions because they don't want to reinvent the wheel with their hardware software stacks. Because we already have existing restrictions on Chinese technology on US roads, but does the Trump administration enforce them?
Or the next
Because
one.
that's the big part, right? Yeah,
Yeah.
exactly.
Yeah. Yeah.
But the other thing, though, the last thing, because I know you had mentioned this might be the last thing, but I wanted to get your thoughts on this 50% rule that Trump implemented a couple of weeks ago, and then last week, the Chinese government dialing up the restrictions on rare earths and magnets.
Yeah,
Now,
yeah, and we can maybe drop a marker that there's probably another live stream to do about what's happening with the automotive supply chain. I mean, we were just talking offline before we got on. There seems to be more and more signs. I saw them, I'm seeing them more and more signs of stress in the automotive supply chain, and the rare earth fight, and just the fight between China and the United States in general. But the rare earth fight is an example of that, right? I mean, the Chinese, got hacked off at Trump. They felt like the Trump administration was not following the script that they were supposed to be following to get to an eventual deal. So they grabbed they hit one of their red buttons and restricted the materials, the rare earth materials that I think most of our listeners know are essential to electric vehicles, to just vehicles, any kind of vehicle, also to the defense establishment in the United States, also to the technology industry. And I think that's just one example. The additional tariffs on steel and aluminum, all of this. I mean, the supply chain crisis that I think people in the auto industry had hoped was kind of over as of about 2023. The post-COVID or the COVID-related supply chain crisis, it looks like it's back, or back in a different form and for different reasons. So I mean, that seems like the very last thing that a lot of these companies need. And again, I mean, I don't normally get that excited about third quarter financial reports from different companies, but I do think that this coming week is going to be interesting to see how what the CEOs, starting with Elon Musk and Jim Farley and Mary Barra, what they're going to be willing to say or what they're going to be able to say about the environment that they're in, because you've got tariff instability continuing. You've got the EV, the things we've talked about through this podcast, all of that, and none of it is conducive to building up cash flow. None of it is going to help profitability. You're already seeing layoffs at some of these companies. I think it's going to be a rocky road here, and the geopolitics and the trade tensions definitely don't help.
a couple of things about the rare earths. The Chinese government effectively said any rare earth material. So they've restricted not only the actual rare earth metals to be shipped outside of China, specifically if they're going to be used on defense products, okay, which concerns the EU and the United States extremely. The second part is they've also restricted shipment of magnets. Okay, so they're closing loopholes effectively, and saying you need to prove to us that it's not going to go in to a defense product, and we're still going to limit that.
And by
So
the way, who didn't see that coming? Because I mean, even someone like me, I'm no trade expert. I've paid more attention to it than maybe the average person, and so do you. But who didn't see that coming? Because that's exactly the language that the United States uses when it restricts access by the Chinese or by Chinese entities to powerful semiconductors, NVIDIA chips. It's exactly the same kind of language.
Deja vu all over again.
Yeah.
Just on.
So I mean, and again, that's not to say the U.S. doesn't have legitimate concerns. I think it's pretty clear the U.S. government does. But who didn't see this coming? I mean, this seems like a pretty clear. And then you saw Donald Trump trying to walk some of this bellicose talk back because the stock market took a dump. Yeah, so it's ever changing, right? It's ever changing.
So here's what's happening because of all these different restrictions that have just popped up over the last couple of weeks. Companies are hoarding, right? They're buying ahead and hoarding parts, whether that's the analog chips that we were talking about offline, but also some of these rare earth magnets, right? And there's volatility, there's supply chain issues, but long term, think about it this way. Right now, China has 60 or 70% of the mining for rare earth metals and then 90% of the refining. Now, take that entire capacity out. and the rest of the world is now fighting for 30% and 10%.
Yeah.
How much will prices go up because of that?
You'd think a lot but you'd think a lot. And yeah, yeah, yeah. Let's leave it there for today. Sounds like we have a couple of things we could come back to. Supply chain chaos or we go to San Francisco, maybe both.
I actually think maybe we have Ed back on to talk about this this survey that he did.
Do that
And
too.
let's deep dive on that, because you and I both have some questions that I think he could answer very clearly for us.
Yeah, I think so too.
I'm not traveling that much through the end of the year, so we'll be doing that. We'll be scheduling these more regularly. So
that we will. And with that, we will say goodbye. And if you didn't catch us live, hope you should be able to catch us on our Substack channels or our YouTube channel. Have a good one.
we'll see you soon.
See you too. Bye.